Good morning and welcome to this Moneycontrol live stream. We're watching Opening Bell with me, Nandita Khemka. Wednesday morning, after the kind of terrible Tuesday we had, looks like we are poised for some bit of green on the screen today. And that is of course attributable to the strong comeback that we saw on Wall Street overnight. AI disruption fears have dissipated somewhat. We'll talk about the reasons behind that, and we'll also talk about the cues for trade. A lot of stocks will be in focus today. Trump is addressing the State of the Union address, so we will talk about that as well. Lots of cues to digest, and individually as well, lots of stocks in focus. So lots lined up over the next 1.5 hours. Stay with us. We'll also be addressing all your stock related queries. Send them in to us between 8:30 to 9:15. We will try and get them addressed with our experts. And of course, lots lined up as I mentioned, but let's quickly take a look at the top stories that this hour before we proceed further with the show. Wall Street ends higher, buoyed by tech rally as renewed enthusiasm towards AI offsets concerns over disruption. Nasdaq was up over 1%, while S&P 500 and Dow Jones end the session within 0.5% higher as well. Asian markets have also opened higher after tech-led rally lifted Wall Street overnight. In fact, the Kospi index has hit a fresh record yet again. The index, mind you, is up 43% for the year so far, outperforming most of the markets in the region. Meanwhile, GIFT Nifty is indicating a positive start, a 60-point pump up on the Nifty. Perhaps that's something that would see at market open. Oil prices have eased as Iran agrees to take steps towards a possible nuclear deal with the US. Of course, all eyes will be on the talks in Geneva tomorrow. Meanwhile, gold prices have retreated, easing from a 3-week high on renewed strength of dollar. Gold prices, in fact, as I mentioned, silver prices also follow suit. Tata Sons have deferred its decision on Group Chairman N. Chandra's term extension till the next board meeting in June. Sources have said that Tata Trust Chairman Noel Tata asks for certain conditions linked to N. Chandra's reappointment while raising concerns about losses in group companies. Both Noel Tata and N. Chandra have sought the deferment of the decision rather than a vote. And the OFS, or offer for sale for IRFC, opens today for non-retail investors as the government looks to divest 2% equity with an additional green shoe option of another 2%. The floor price for the OFS has been set at 104 rupees per share. All right, let's take a look at the trade setup then before we get on board our experts for the day. Asian markets have risen after a tech-led rebound in the US overnight. As I was mentioning in the headlines, South Korea's Kospi has managed to hit yet another record high. Even when sentiment was weak across Asian markets, we saw Kospi defying that trend and hitting record highs. And today, of course, the texture is much better. So today as well, it has managed to clock a fresh record high. The index, by the way, is up in excess of 40% for the year. Looks like it's in a sweet spot, and even where AI is concerned, looks like South Korea is in a sweet spot. In terms of the US markets, overnight we saw a very strong rally come through, with Nasdaq jumping somewhere around 1% or so. US futures are also inching higher. Mind you, Nvidia, Salesforce, these companies will be reporting numbers later today. Ahead of that, we saw some bit of a comeback or a rebound of sorts on Wall Street. Also, there were a couple of deal announcements. Meta Platforms has announced a deal worth over $100 billion to buy AI chips from AMD. So that's another big deal that was in focus, and that triggered a very good rebound across the technology pack. Anthropic, meanwhile, yesterday we were talking about the event that was planned for demonstration of what its AI tools can do. Anthropic was going to do that, and they've launched new connectors and plugins for their Claude Cowork. Now, these launches, in fact, show that in fact they pave the way for expanding the reach of Claude chatbot to build partnerships in software and services sector. Perhaps this is something that allayed concerns, and of course, the fact that it will open the doors for more partnerships. That kind of provided some bit of a balm to all the worries surrounding the AI disruption. Our technology stocks also took a beating. Remember, IBM tumbled 13% day before. That was the worst drop since 2000. And yesterday, our technology stocks also took it on the chin. Some stocks were down 7%, 6%, and in terms of the monthly drop, the IT index, the Nifty IT index, is down 20%. I mean, that's the kind of weakness we've seen. But overnight, we saw some bit of relief when it comes to ADRs, because Infosys ADR was up 0.5%, but Wipro ADR gained somewhere around 3% or so overnight. Another big factor this morning is Trump's address. The State of the Union address. Of course, he's been gloating about what he has achieved thus far in his term, as is the case usually with presidents during the State of the Union address. But he did also touch upon tariffs. Of course, that's the heated topic or hot topic everywhere right now, right? So he did allude to the fact that countries that were ripping United States for decades are now paying millions of dollars to the US by way of tariffs. And he's also pointed out that tariffs will replace income tax as time goes by, and also mentioned that congressional action will not be needed on tariffs going forward. So that's the latest cue coming through from around the globe. But back home, the GIFT Nifty is suggesting an uptick of somewhere around 60 points. The key will be whether or not any uptick that we see would sustain throughout the day or not. And that would be the key. It's the start of the March series. We'll see how bulls make a comeback, or perhaps there would be a tug of war between the bulls and bears. That's something we'll discover today. But in terms of our markets, we erased 2 days of gains. IT stocks were the biggest laggards yesterday. Nifty did manage to defend 25,450, but there was a new swing low formed yesterday, 25,327. But still we managed to recover over 100 points from the day's low. We closed below the 21-day moving average of 25,585, and 25,600 according to experts would be the resistance zone to watch out for on the Nifty now. The VIX index volatility has shot up quite a bit. Last 5 days, we've seen a spike of 14% on the India VIX, closing in on that 15 level. India VIX now. Nifty IT was down for the 5th straight session, slid 5% yesterday, 21% for the month for February so far. That's the kind of pain we've seen for the technology pack. Coforge has slumped 26% this month. KPIT Tech, Persistent System, Tata Tech, these were among the top mid-cap losers. Of course, on a year-to-date basis, most of these stocks are down 20-25% or so. But in terms of fund flows, there was a meager sell figure of 100 crores in the cash market by the FI community, but DIIs bought shares worth 3,100 crore rupees or thereabouts. So all in all, that's the setup, poised for a positive open, but the sustainability of those gains will be the key. But on that note, let me bring on board our guest for today. Joining me is Jatin Geria, VP Technical Research at Teji Mandi, and as always, Gaurang Shah, Vice President, Geojit Financial Services. Gentlemen, lovely chatting with you. I'll start with you, Jatin. Yesterday, of course, sentiment was, disrupted and quite badly by the IT pack, right? So far we've seen the index forming, lower lows and lower highs, so to say. Today, the GIFT Nifty is, indicating a positive start. But, even if we see a positive start, what are the chances that we will sustain those gains? Technically, how are we poised after yesterday's correction?
Good morning. See, what we at Tejimandi believe that the Nifty has formed a lower top at the level of 25,885, and thereafter, whatever pullbacks that we are witnessing from the 25,400, 25,500 zone are not being sustained at higher levels. Having said that, more or less, the Nifty has been range bound between this 500 point kind of a range. However, the inability for the Nifty to move beyond that zone is a little worrying for us. We believe that the Nifty could slip towards the support zone or the gap area that was formed while the announcement of the trade deal, US India trade deal happened. So, we are looking out for levels of 25 250 to 25 100 on the downside. On the upside, if today's positive opening is sustained, then we can expect some amount of short covering in the Nifty, which could take the Nifty higher towards that 26,000 mark. So I believe the first hour of the trading session will be very crucial today. We will be starting the March series expiry as well. So that is again a parameter to watch out for. So I believe that the first initial hour would be very crucial for the Nifty, and I will be looking out for sustainability of the moves rightly pointed out by you. So yeah, that is the trade setup for today. The first initial hour will be very crucial for the Nifty.
Okay, first hour will be very crucial for the Nifty. Gaurang, morning. Great to have you on the show this Wednesday morning. And thankfully, the setup at least is looking a bit positive compared to what it was yesterday. But a lot really has happened in terms of the US trade deal as well, post the SC verdict and Trump retaliation of higher global tariffs. Things aren't looking all that hunky dory when it comes to the tariff picture as well. And now with most of us waking up to bad news when it comes to developments on the AI front, we've seen the market react to that as well. Overall sentiment, how would you really, capture that, and what should be the way forward for the market here on?
Thank you so much, Nandita, for having me on the show. Good morning to all the viewers of Moneycontrol and CNBC TV 18, and to you and your entire team. A small disclosure, we may go into stock-specific recommendations as well. So all recommendations that I'll be sharing with you, Nandita, this morning on your show are a part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of investment, no financial interest, no conflict of interest, but we give recommendations to our clients on similar lines. They might hold their investment interest. So first of all, I think yesterday's correction again, we went to those levels where we've been earlier of 25,400, and then we recovered. Expect a similar recovery today as well. Being Wednesday, a day before the monthly expiry, Nandita, tomorrow is the monthly expiry in the futures and options segment. So expect a little bit of choppiness and volatility today and tomorrow. IT, to answer your question, I think there is a lot of news flows and a lot of reactions, overreactions, I would rather say that, Nandita, on the street as far as IT is concerned. Not only in Indian markets, but also in US market. You see the way certain IT giants have reacted to this Anthropic AI tool and the futuristic tools to come by, which we don't know of. So IT sector will go through a little bit of pain in the immediate short to medium term, but of whatever we've heard and whatever we've seen in the AI summit in Delhi, which concluded, that was very positive.
Yeah.
I think a lot of verbatim that has given. And more importantly, Nandita, I don't think any IT company head has come and spoken on any media saying that they are going to cut down on headcounts and that their business is going through will go through a huge turmoil and their earnings will get impacted and they'll have to cut down, headcounts or maybe cut down operation, etc. None of them, at least what I know of. So, I mean, we remain optimistic at Geojit,
Sure.
small cap, mid cap, large cap IT with a 1.5 2 year time horizon. Valuation wise, if you actually have to reflect upon third quarter, second quarter, and first quarter earnings and where the stocks are traded today, some of them at 52-week low or new 52-week low, including very close to 52-week low, I believe, is IT index. So you have a 1.5 2 year time horizon. You can definitely look at nibbling into it. Don't expect any kind of miracles in the immediate 3 months, 6 months, 1 year kind of time horizon because news flows will keep them under check. Developments will definitely bring in a little bit of more confidence in terms of AI data centers, etc., which the management has already spoken on. The markets, Nandita, expect a pullback. 25,600 would be the level which we need to test and hold our heads above those levels. If we are able to do that, then I think we have a little bit of more upside.
All right, 25,600, the floor, upside, on the upside seems to have shifted from, 26,000, 25,900 to 25,600. But I take your point on IT. Of course, don't expect any miracles over the next 1-2 years. Street is also trying to understand, how adaptable IT companies will be to this AI disruption. But, Gaurang, one more thing. Yesterday, the new launches from Anthropic kind of eased some fears. It kind of led to the belief that it would open up or pave the way for more partnerships. Would you be also of that camp that believes that no matter how the street is fearing this AI disruption, in the end it would lead to more partnerships and IT companies will adapt like they have done in the past to other disruptions as well? Would you still be in that camp?
Nandita, again, I read on moneycontrol.com website itself, there was a statement made by the India representative of Anthropic AI that they are here not to compete and cut. They are here to coexist together. This was the statement that I read of the India representative, Anthropic AI. So, Nandita, look, you and me could be a little bit of naive, okay, in terms of understanding the complexities of this particular product. But I think the IT giants which are based in India, which have a track record, when they come out and say, when the honorable minister comes and tells us, including Mr. Goyal, Honorable Minister Mr. Goyal, that look, and minus the political figures, if I have to purely believe on the verbatim that was given by the IT company heads during the AI summit and post that and before that, I think we have to give them a little bit of more respect and show a little bit of more confidence in terms of what they are saying. My sense is that this is an overreaction. I am again repeating myself, Nandita, of whatever we are seeing on the street, especially on the Indian IT companies. And this overreaction will be done and dusted in some time. I don't know the time frame, but in some time, I'm hoping that. So on backdrop of all that and the statement I made in terms of our coverage at Geojit Investments and the time horizon and the valuation and the earnings drop back, I think you should possibly look at dipping into it. And I think definitely they will complement each other and coexist rather than compete.
Okay. That allays some investor concerns regarding AI and how the stocks have really reacted. I mean, 20-25% down on some of these stocks on a month-to-date basis. It's like it speaks of a lot of pain. But Jatin, coming to you, we'll come to you for your thoughts on IT. But what would your trade for the day be in terms of the Nifty and the Nifty Bank? How would you really trade?
See, for the Nifty, I believe that it could be a positive opening. As I said earlier, I'm looking out for a negative hourly close around that 25 650 levels where we have the 20 and 40 hour moving averages. So I would look out for a negative closing around that and go sell on the Nifty with a stop loss placed at 25 725, and on the downside I'm expecting 25 500. So that would be my take on the Nifty. For the bank Nifty, I'm a little positive because that has been holding on in this sell-off. Uh, in the bank Nifty, the crucial support is placed at 60,800 on the on the upside the resistance is placed at around 61,340. So bank Nifty becomes a buy from my end. We believe that the opening that we might have could be bought into. On the upside, the target area will be 61,300 to 61,350.
Okay, that's a buy on Bank Nifty that can be bought, trade on the Bank Nifty, so to say. But hold that thought, Jatin. Before I come to your take on IT, just want to run our viewers through the top stocks that will be in focus today, very quickly. Starting with Hindalco, it has entered. In fact, Novelis, its arm, has entered into an agreement with AV Minerals to buy 13 lakh shares for $200 million. So that's one stock that will be in focus. Remember, metals did manage to stage a good comeback yesterday and ended high by almost about 0.8%, the entire metal index. So that's one pocket that did well yesterday. Pharma was also in focus, and today Dr. Reddy's will be in focus given the fact that Securities Exchange Commission has concluded investigation into the company with no enforcement action. So that's one stock to keep your eye out on. Hexaware, it has collaborated with Amazon Web Services to deliver AI-powered solutions, software development lifecycle solutions. So that's one stock. In fact, the entire IT basket will be in focus after the kind of rubbing it saw yesterday. Lupin is another stock that will be in focus. It has got a US FDA approval to launch a drug in the US, and of course it has an estimated annual sale of $135 million in the US. Another stock that will be in focus would be IRFC from the railway pack. OFS, or offer for sale, has opened up today for non-retail investors. Government will be divesting a 2% stake with a green shoe option of 2%, additional 2%. The floor price has been set at 104 rupees. This was, remember, one of the most talked about stocks in 2023. And that point of time, everybody was wondering why the government is not cutting stake. But now the OFS is coming through and open for non-retail investors today and retail investors tomorrow. Lastly, Aditya Infotech. This stock will also be in focus. Sources suggest promoter and Dixon Technologies are likely to sell up to almost 6% stake via a block deal. The offer size is at 1,000 crore rupees and the floor price is at 0.6% discount to the current market price. So those are largely some of the stocks that have been focused today. Jatin, coming to you, wanted your take on how are you looking at some of these IT names, particularly the mid-cap IT names, because the likes of Coforge, Persistent, they have corrected like no one's business. On the fundamental side, some experts believe they are still expensive, but technically, how is the setup looking like for some of these names?
See, rather going into stock specifics, I would comment on the Nifty IT index as so Nifty IT index, I see on the charts it has corrected 25% within a span of 15 trading sessions. So that is a deep cut, a sharp cut within a short span of time. Now, technically, the RSI or the momentum indicator has reached an extremely oversold condition. However, we don't see any signs of a trend reversal as of now. So, in terms of levels for the Nifty IT index, the next crucial support for the Nifty IT index is placed at 28,540. So that's a decent 1,500 point even from the yesterday's closing. So any pullback, I believe that it has to offer or it opens gap up. I won't be a buyer. I would actually wait and watch for the sustainability of that up move. So trend is still negative. On the downside, 28,540 is the level, and yesterday's gap down area, that is around 31,100. So that would be the resistance. Only above 31,100, I would start to look at the IT index stocks, but every rise is a sell from my end.
Okay, every rise is a sell technically, but fundamentally, Gaurang made a point that it could be the time to start nibbling in. Valuation wise, it offers comfort, and of course, we will all know how this AI thing will really pan out. And coexistence is something that the street is betting on instead of weakening the case for IT. But let's talk about other stocks as well. This morning, Gaurang, coming to you, there's a report on Dr. Reddy's. Where Citi has a sell call, target price is at 1,070. Now, Novo Nordisk has cut its prices for Ozempic by 35 to 50% in the US, and that, of course, is negative for semaglutide uptake for the likes of Dr. Reddy's. Like they were apparently betting on semaglutide as the next big trigger after the Revlimid opportunity expired, right? How are you viewing this development for pharma, especially at a time when there is a lot of constructive thought process when it comes to pharma names? Some of the experts I have spoken to have said that pharma offers opportunity at the current juncture. What are your thoughts? And particularly for Dr. Reddy's, how does this development impact the company going forward? What would your call be on the stock?
So the call, Nandita, is a whole recommendation on Dr. Reddy's. Nandita, we all know there has been multiple times that a lot of companies based out of India into manufacturing of medicines and life-saving drugs get pulled up by the regulator in US, that is US FDA, for certain shortcomings or certain product recall or manufacturing, shortfalls, etc., etc. Based on those kind of news flows, you have a reaction on that particular company and certain other companies in the pharma universe. opportunity is huge, Nadita, that is undeniable for the Indian pharmaceutical companies. And of course, after the rhetoric on trade and tariff by President Trump, uh, and of course the counter reaction from the Indian counterparts, we remain positive on Dr. Reddy's and Cipla, Sun Pharma, Aurobindo Pharma, Natco Pharma, Glen Pharma. These are some of the names, Glenmark Pharma. These are some of the names on which we are positive.
Okay, that's the call on pharma. Just about seconds to go for the pre-open session. We'll take stock of how things are looking like at the pre-open. We'll wait for the rates to settle, but it is still, yeah, it is showing a 20-point uptick on the Nifty as I look at the screens right now. Sensex will wait for the rates to settle because it's showing a little, it's a little haywire at the current juncture. But in terms of stocks, we're still seeing some red ticks when it comes to Infosys. Looks like it is going to be the top laggard on the Nifty. It's down somewhere around 2% or so. Interglobe, that's also showing red tick. But on the other hand, you're seeing a green tick on Eternal. That's showing 2.5% up. The stock has seen a fair bit of correction in recent times. Perhaps some bit of buying could come in at these levels. The Dr. Reddy's is of course showing positive, mild gains at the pre-open, but we'll see how things pan out. HCL Tech on the other hand is showing some bit of a green tick. Bajaj Auto, Bajaj Finance, all these names on your screens are also showing some bit of traction. Reliance Industries, I can see it's showing 1% up. That's correct, 1.5% up on Reliance Industries. So right now, as I look at the screen, it's showing me a 130-point uptick on the Nifty in the pre-open. We'll see how that really pans out going forward. But looks like we are in for a positive start. Sustainability, as our experts also mentioned, will be key. But since we're taking stock of pre-open rates, Jatin, let's talk about specific stocks. Just about 15 minutes for the markets to open. Trades for the day in terms of stocks, what would you keep on your radar?
Yeah, so yeah, we believe that there could be stock specific moves on the upside. So we have picked up two trading recommendations from our end. The first one is delivery. So delivery, after a strong up move, it has been consolidating since last four trading sessions within that range. Yeah, the selling pressure is being absorbed at the 20-day average, and yesterday we saw a mild breakout during the last hour of the trading session. So we believe that delivery could be bought at current market price. On the upside, we are expecting levels of 455 to 458 with a support placed at 427. So delivery is our first trading recommendation. Another stock that we like is Tata Power. So Tata Power is showing a decent recovery from the lower levels, and more importantly, it's sustaining above that 20-day average. So I would be a buyer in Tata Power with a stop loss placed at 370. On the upside, I'm expecting 397.
Tata Power and delivery, these are the trades for the day coming through from Jatin. Gaurang, compounding idea from you, not necessarily for the short term, but we want a very good compounding idea for you from a long-term perspective for our viewers.
I dare not give short-term, medium-term, Nadita, otherwise I'll be pulled up. So these are all long-term fundamental investment ideas. So we've seen the entire BFSI segment doing well, Nandita, and I think over there, one particular segment that has caught my attention for a pretty long period of time, Nandita, is the public sector banks. Not only your names like SBI, which done phenomenally well in terms of earnings, but certain mid-cap PSU banks like Indian Bank. This particular mid-cap bank is on the roll and on the rock for quite some time on fallback of excellent numbers. I believe the stock yesterday was at a new lifetime high and has been holding out quite well even during difficult market times. So Indian Bank is a fundamental long-term investment idea. I think the prudent strategy for your viewers and investors would be to start nibbling at current levels and add on dips and have a longish time horizon.
Okay, compounding idea, Indian Bank, start dipping in. That's the view. That's the compounding idea from Gaurang. Let's shift focus to some viewer queries then that have been trickling in, and I want to club, your views on IRFC with a query on one of the railway stocks. First of all, IRFC, Jatin, would it be a trade? Of course, OFS opens today. Government would be, offloading 2% stake with a green shoe option of another 2%. Railway stocks, of course, have been out of favor. 2023, this stock was among one of the most talked about railway stocks. Would it be an avoid? Of course, it could see some bit of pressure at the open. Would you be a buyer or would you avoid? What is the call here? And I think I spotted a query on RVNL. Hakeem has written in, wants to know your thoughts. He's bought shares around 390 each a few months ago. So what is your recommendation for Hakeem as well on his holding on RVNL? Go ahead.
See, first on the stock IRFC. So technically, it's forming a lower top, lower bottom structure, and even the previous swing low that was around that 110, 111 level was breached decisively in yesterday's trading session. So it has witnessed a breakdown. Now the next crucial support for the stock IRFC is placed only in the range of 102 to 100. So that would be the level around which I'm expecting the stock to slip. So no new buys at current levels in the case of IRFC. And if someone is holding, then he can exit at CMP. For the case of RVNL, so RVNL again, yes, RVNL is one stock which is holding on pretty nicely about that 300 kind of a zone where we have a strong base formation in place. So RVNL could be one stock where the investor should continue to hold with a stop loss placed at 300. On the upside, I'm expecting 335 to 337. So that are the levels to keep in mind for RVNL.
Okay, that's about RVNL. Hope that answers your query, Hakeem. A couple of queries that Harsh has been sending in for quite some time. I want to get that addressed by you, Gaurang. We've spoken about IT at length, but particularly two stocks, Saxoft and Zensar Tech. Our viewer has a query on these mid-cap stocks for the longer term. What would your advice be?
Unfortunately, Nandita, I don't think we have specific coverage on these two, but let me say this for the benefit of the caller and, of course, the investor, that have a little bit of elevated risk appetite in IT sector as of now, given the kind of unending news flow and the innovation and development that is going through. Be very, very updated about the earnings. And the moment you feel that earnings are dragging or that's creating a little bit of headwind for the stock price to move either ways, take a remedial step. Nanita, my feeling is that companies will compete and coexist, but at the same time you need to be aware about the management and the management's capability and the capacity to scale upwards and stay updated and reinvent themselves in terms of whatever is happening in terms of innovation. If the companies and the management are lagging, take remedial steps and act on your investments ASAP rather than getting sentimentally attached to your stock and waiting in vain for recovery. We like mid cap and small cap IT stocks. Small cap, two names that I can possibly give out over here is on the fundamental side, Cyient Limited and KPIT Technologies. We are positive on these two names.
Okay, Cyient and KPIT, positive on these two mid-cap names, but particularly for the counters that I mentioned, Jatin, do you have any views on these two stocks, Saxoft and Zensar, in terms of levels?
Sorry, the names, please.
Saxoft and Zensar Tech.
Yeah, for Saxoft, the crucial support is placed around 140 to 138. So there we have the previous swing low. So that could be a support. On the upside, the resistance is placed at 156 to 158.
Okay, that's the view. All right, let's move on to some more queries. A few of them are trickling in. Please keep them coming in till 9:15. I'll try and get as many addressed as possible. There's one coming in from Teja, and he has a query on Angel One. Wants to know how is it looking like for a swing trade perspective for a term of 6 months. Most of these broker stocks have had a rough ride, right? Especially since new norms from the RBI, in terms of bank funding, etc. Gaurang, are these stocks looking out of favor, especially for a period of 6 months or so? How are you looking at it?
Two things over here. The 6 months is fairly short term for me to comment anything on the fundamental, but let me give a little bit of longish time horizon. And I'll speak specifically with related to the sector, not with respect to Engine One because we don't
Okay.
have coverage. And this one is, by default, is closely associated with the Indian capital markets. Now, we are of the opinion, especially, this is my personal opinion as well, Nandita, that Indian stock markets, if they have to grow anywhere between 12 to 15% per annum, and if you have to compound that run rate for the next 3 to 5 years, I think you will get a very clear idea as to where Nifty and Sensex are headed. And with that kind of a view, I think all those companies which are fundamentally strong associated with the Indian capital markets will do also well. Whether it's, I'm giving you an example, Nandita, whether it is a platform provider like BSC and soon to be NSE with the IPO, green signal, etc., or services providers like CAMS, on which we have a fundamental coverage, we are positive on the sector, or something like TOOS depositories, NSDL, CDSL. And the third one would be intermediaries. All these will, definitely do well with the Indian capital markets doing well.
Okay, got your point. Jatin, from a trading perspective, if you have to answer this query, what would you say?
Yeah, see, Angel One is one stock that has been pretty range bound between 2,300 to 2,800. So this is the 500 point range within which it has been trading since November. Overall, the trend for the stock has been range bound. Now I have to, if I have to trade, I'll be only a buyer about 25. So that is the crucial short-term average. Only above that, I would be a buyer with a stop placed at 24.20. So I would be a buyer only. It would be a conditional buy about 25 with a stop placed at 24.20. On the upside, the target area that I would be looking out for is around 26.70.
Okay, 25. That's the zone where, of course, Jatin will be a buyer in this particular stock. Hope that answers your query. Two more queries, and I just have 4 minutes or 3 minutes before the markets open. Now, I spotted a query on Ashok Leyland. James has written in, wants to know whether it's a good time to enter. He hasn't really given me his time horizon, but Jatin, I would like to throw this to you. Ashok Leyland, is it a good time to enter?
Yeah, see, Ashok Leyland has been in an uptrend, so there is no point in waiting for a pullback. All the pullbacks that it has been giving is holding on to its 20-day average. So currently that level is around 202. So I would be a buyer even at current levels with a stop place at 202. On the upside, the immediate resistance that we are seeing is around 225 to 230. So yes, he can enter with a stop loss placed at 202.
Okay, that's the view on Ashok Leyland. Schaeffler India, there's another query on this particular counter from Bharat. Wants to know your thoughts. Numbers came out, pretty solid set, 35% uptick in net profit, revenue up 28%. EBITDA has also grown in excess of 30%, and the stock has also seen a very, very good rally. Gaurang, to you on this counter, any thoughts? Have you been tracking it at all? Is it a good time to look at this stock post numbers?
Yeah, so I think it's a strong two-wheeler play in terms of auto ancillary OEM segment. We all know Gabriel is known for its shock absorbers and crankshaft and sprockets, Nandita. Has a very decent market share in India, and the best part is the product recall or customer loyalty, whichever way you want to say it. We used to have coverage, and after our targets were put in place in Gabriel, I think it is currently we don't have coverage. It may be under review. I'm not too sure, so no specific comments. But I think the opportunity for auto and auto ancillary. We have coverage on Uno Minda, we have coverage on CIE Automotive, we have coverage on Samvardhan Motherson as auto ancillary investment ideas, Nandita. And this FTAs that the Indian government has signed with 8 or 9 plus countries and work in progress with US will throw up a lot of opportunities for not only auto but auto ancillary and OEM segment companies as well, Nandita. It's one of the stronger players, Gabriel, in this particular sector.
Sure. That's the view on the entire space put together. But last query, of course, markets are opening up. But last query, can't really get the person's name. Wants to know which is a good intraday play: Eternal, Keynes, MRPL, or Godfrey. Jatin, very quickly, which of these 4 stocks would you take a bet on an intraday basis?
MRPL would be a better idea, breaking out of a consolidation. So for the intraday, I would be a buyer with a stop placed at 190, 195, and on the upside 202 would be the target area.
All right, MRPL, a good intraday play. Hope that answers your query. We've addressed all the queries. Thanks for writing in and keep writing in. We will get them addressed from time to time. But gentlemen, thanks a lot for taking out time and joining in.
Thank you.
Always a pleasure. Look forward to our next interaction as well, Gaurang and Jatin.
Thank you.
On that note, take a
you,
look at how we've opened up for the day. It's a good triple-digit move coming in on the Nifty. We are back around the 25,550 mark. Remember, our experts have flagged off 25,600 as the level on the upside to watch out for. We'll have to see whether or not we manage to hold on to these gains or not. The sustainability throughout the day will be the key. So March series starts off on a positive note as of now, but let's see whether or not the bulls manage to hold their head above water. Sensex up 400 points. Mid-cap index moving largely in tandem with the benchmarks today. Yesterday, mid-caps and in fact the entire broader end of the markets were outperforming the benchmarks. Today, they are largely moving in tandem. The mid-cap index is up almost 0.5%. The breadth of the market as of now is looking pretty solid. 3:1, that's the NSE advanced decline ratio. But we'll wait for it to settle down a bit before calling it a trend for the day. So 1,627 advances to 534 declines. Things are looking pretty solid at the current juncture. Whether or not this rebound extends throughout the session is or not is something we'll watch out for. Bank Nifty in the green, up 180 points, 61,220 is where it's at. But let's see what the IT pack is doing, because that's that's something that led the rebound on Wall Street today. The Nifty IT pack is the top sectoral mover. It's up 2.5%. In tandem with what transpired on Wall Street, you saw the tech-led names stage a comeback, which is what pushed Nasdaq up 1%, and that's exactly the case with our markets as well. It's the IT pack that's leading from the front, buying emerging after the kind of hammering some of these IT stocks have seen. The metals yesterday, they were the bright spot in the market. Today as well, 0.8% higher on the Nifty Metal Index. Real estate, that was another sector that has gotten badgered in trade. Today, that sector is also up 0.7%. Energy is up and about. Yesterday also, energy pack was in the positive zone. FMCG is also extending its gains to a third day, if I'm not mistaken. But it's the PSU banking index that's trading marginally in the red, but PSUs have taken the lead, in an otherwise volatile market. So today, some bit of profit taking place in PSU banking index. Autos also, some bit of a pause here, but trading with mild cuts. In terms of individual movers, Tech Mahindra is taking the lead, HCL, TCS. So top 5 gainers on the Nifty are from the IT pack. TCS up 2.5%, Infosys up 2.5%, Wipro up 2%. Aside of that, you have Hindalco that's doing well. There's news flow around this counter and it's reacting to that. NTPC, Geo Financial, Interglobe, Tata Steel, these are some of the other counters that are doing well. On the flip side, thankfully the list of losers is pretty slim today, and Dr. Reddy's is topping the losers list. There was a Citi sell note, and they've said that how Novo Nordisk is cutting semaglutide price, and that could impact semaglutide offtake for companies like Dr. Reddy's. I think because of that, the stock is down 2%. Eicher Motors, Max Healthcare, Asian Paints, Bajaj Finance, Shriram Finance and Maruti Suzuki, these are just a few handful of losers today. The screen is looking solid. Let's hope that this continues throughout the day. Just want to glance through the mid-cap movers as well. as to what is happening on the Nifty 500 index. You have stocks like Star Health. They're gaining quite a bit, 6% up on Star Health. Some of these mid-cap IT names are doing well now. Some bit of buying coming in after the hammering. Birla Soft up 5%. Emphasis up 4%, KPIT up 4%, Persistent up 4%, Coforge also up 3.5%, L&T Tech. So yes, some value buying emerging at lower levels. But Schaeffler India, we discussed this stock, that's up 5%. The stock has seen a very good run up already, but post good numbers, the stock is up 5%. On the laggards list, you have Premier and Vari Energies. These stocks are down 10% each. IRFC is down 4%. Of course, the OFS kicks off. Supply pressure, and that's putting the stock prices under pressure as well. Afcon Infra, that's down 3%. You have Tata Communications, that's down 1.5%. Vardhaman Textiles is extending losses. Craftsman Automation, the other stock, that's not doing well, and so is the case with Vishal Mega Mart. So all in all, texture of the market is looking much better. Overall things are looking okay. But there are certain pockets that are still seeing some bit of a weakness. I mentioned Vari and Premier, those are the top two laggards on the Nifty 500 universe. Well, on that note, let me bring on board the big market voice of the day, market maker for the day, A. Balasubramanian, MD and CEO, Aditya Birla Sun Life AMC, joining in this morning. Lovely chatting with you, Bala, as always, and I always look forward to our conversations. I was just going through your fact sheet and all the pointers that you guys put out. In that note, I read that you've described 2026 as a year of reset and repair for Indian equities. In your sense, what's your sense? Because we've seen things changing on the US-India trade front. Globally, tariff situation is evolving even now, especially after the SC verdict and Trump's retaliation, and we have the whole AI disruption to also weather, right? So, in your sense, if you say that 2026 would be a year of reset and repair, what gives you the confidence, after the consolidation in 2025? Would it be the fact that FIS sell-off is abating, or would it be good earnings growth, and possibility of better earnings growth in FY27? What is it that really gives you the confidence to call 2026 a year of reset and repair for Indian equities?
I think the first and foremost, I think 2026, as we set out this expectation for this year, clearly was coming from the fact that India has been taking all the steps and efforts to ensure that in the current global uncertainty, both on the geopolitical side, as well as the technology disruption that is coming in, the step that is being taken by India is to make more India's inclusive growth opportunities to become more powerful. That started actually coming from before the budget, the GST reduction, in order to boost the consumption. Second, focus on the investment-led demand growth that India has to thrive. And third, focusing on making India as a hub for global manufacturing. And finally, making the cost of capital for anybody putting money in India to become to be very reasonable, so that the investments can come, so that it can generate higher ROE. So that is something was a driver. And third, if you look at it, we are still waiting for the 8th Pay Commission result, which I think should come in another 4-5 months. So that also will boost the general money in the hands of people to drive the consumption growth in India. So that's where I think the India story is coming back. And second, we have also gone through the last 2 years of maybe a stable or underperformance period compared to global market. And all the steps that is being taken by the government and the respective policymakers are all leading to only one, which is an improvement in the credit growth and improvement in the earnings of the companies. That's where the current outlook has been. And in my way, that doesn't change. Even the current volatility that we are witnessing, more on coming out of tariff, which of course is going up and down. But India has been pretty in a neutral stage in terms of the new tariff. If it comes, India is the beneficiary, and whatever is agreed upon with the US, also in some sense, India is the beneficiary. Therefore, from India point of view, it's something which I think win-win kind of situations. But having said that, from a global investors' point of view, while Indian investors continue to repose their faith or participate in the Indian mutual fund industries as well as in the Indian capital market, and the global investors have been completely on the sell side for a variety of reasons. One, the global uncertainty that they are seeing in both in the US and currency volatility they are saying, then naturally their ability to actually to invest in other markets outside their own domain comfort that they have, it's very difficult, it's obvious to understand that. But US also is now thinking about the change of guard in the US Fed is already talking about following the principle of the US president of cutting rates. So assuming scenario, they start cutting rates, which is our current expectation is, then the lowering of interest rates in the US would probably lead to more money moving out of money coming to the emerging market. That's why I think India seems to be in a good spot to get that FI flow. In fact, we as fund houses are quite bullish this year for FIs flows to return to India, given the fact that among the emerging markets, India continues to become more and more stronger, but valuation is also getting corrected. And the last 2 years of flat performance compared to other emerging market, I think India definitely seems to be coming in the spot from the point of view of increasing the allocation towards India. At the same time, there are other markets in Asian markets, whereas Korea or China have done exceedingly well in the last 2.5 years. Therefore, some bit of reallocation in our own belief is will come into India. Therefore, broader basis, if you look at it in 2026, I think we have put out a positive outlook for rest of the calendar year. But having said that, the current volatility that we are witnessing is largely on account of the reset that is happening on. You mentioned about reset. Definitely, AI is something is creating some bit of challenging rather to most of the traditionally driven companies. And that's why we have seen some of the Indian IT companies underperforming as a result of that. But that's something we'll have to just wait and watch out.
So wait and watch, yes. But are you constructive on tech companies despite the AI-led concerns?
Yes, I think we were seeing like some value buying in the IT sectors, given the fact that Indian IT companies have gone through this kind of challenging period in the last almost 2.5 decades since the time they started. They have seen debacles coming and affecting these sectors. At the same time, given the huge capability and then the forward-looking the management depth that India has got, such as Nandal, he gave a good insight about how the India is reshaping on the AI side in the recent AI summit, and most of the IT majors in India, right from TCS, Infosys, all of them actually preparing themselves actually how they should position in the change world on the AI space. That's I think it shows the confidence that Indian companies will be able to actually build their skill set and capability to also benefit out of this AI-led opportunity that is providing. At the same time, how the whole model will undergo change. I think having seen Indian companies coming back very strongly on these kind of evolving situations, I would assume the value-based buying that currently we have, balance sheet is clean. The huge amount of cash, of course, is sitting on the balance sheet, and then the basic spending in which I think India is playing a bigger role. I think that will continue. At the same time, building their capability to face these AI.
So if somebody were to look at buying it from a valuation standpoint, would you recommend looking at large cap IT or mid cap? Sure, I think there's some problem with the connection.
Yeah, is it okay now?
Just get it sorted. It seems to be fine.
Is it okay?
Go on. Can you complete your thought? Yeah, it's okay. I can hear you.
Yeah, I think from the company's point of view, the definitely, of course, the large cap names who are the leaders in the IT space historically, I think they would be the one. I think on an embedded basis, they will be able to reshape their business model to ensure they do participate in these AI-led opportunities. And there are specialists. I think there are mid-size companies. I think India, if you look at it, large versus mid, if you say, there are specialist companies in the mid-size space who actually have an exclusive focus only on the AI space. Therefore, this is something we'll have to do a mix of both large and mid-cap. But having said that, I think there is I would probably say deep value in this business. But except one has to fathom the volatility that they will have to go through, given the noise levels on this sector is very, very high.
Okay, got your point. Also, one last point on IT. Do you think the bulk of the correction is out of the way? Because we've seen The IT index shedding over 20%, months to date, even year to date, it's a similar, correction that we've seen. And some of these IT names are down 20-25%. Do you think it's already in the price, all this news flow surrounding AI?
So I think the way I would look at it, I think historically this sector has always had overweight to the index, right? I think given the fact that India IT companies has always been extremely promising and they are the leaders in the respective field, therefore some bit of overweight that most investors would have had, whether it is foreign investors or the Indian investors, to a large extent they would have they have been reducing the exposure to the extent I would say. We are more or less in the stage of the buying levels, but I think volatility may remain for some time, given the fact we are in the rediscovery stage as far as this sector concerned. But otherwise, broadly, I would say we are more or less worst. And only thing, the uptick can it come back in a hurry? That probably will come only when you start seeing the narrative coming from each of the companies as to how they are building their model to compete with the new world. That's something would probably drive back the sentiment towards the sector.
Okay, that's the view on IT, an overarching view on IT, so to say. But let's shift focus to financials now, Bala. It continues to be your largest sector exposure, and your top holdings are dominated by some large private banking names. Do you see large caps taking the lead in the next phase of the market upcycle within the banking space?
I think the two three drivers for this. One, of course, the high focus that's coming on credit growth improvement largely is coming from the large cap names. Large names in the banking financial space has been improving their credit deposit ratio. I think incrementally on quarter basis, they are showing an improvement, and cost of deposit for large names is low. Therefore, the names generally is likely to be maintained. At the same time, we must also accept the fact that the mid-sized companies, they're also now getting the benefit of foreign participations coming from the recent circular coming from Reserve Bank of India, the flexibility that is being given to the Indian banking system to get foreign partners wherever there's a need. So they're also bringing some kind of new rigor and focus in the mid-sized banks so that they can get capitalized and they'll be able to actually focus on their faster growth. And third, of course, is the non-banking financial service space. Is also very large. In the last few years, has been growing much bigger than even the traditional banking system. And they are able to actually reach out to a large pool of growing needs of Indian borrowers. Therefore, they are not only able to meet the demand coming for borrowing, is also able to get the required margin. At the same time, reduce default ratios, also making them far more better in terms of value accretion. I think we'll have divided into three parts, and my own belief is each of the three parts will do well. But large cap names, I think they also got they underperformed not because of the valuation, they underperformed because of the reasons such as reduction in the weightage and index, which came in for a few months back. It's of course till March it has to get corrected. To the extent I would say we are in the process of portfolio adjustment. I think once it is done, I think as the earnings for a quarter-on-quarter basis on the basis of credit uptake that we are seeing in, that's something which I think would start reflecting on the banking financial services. I think Indian banking financial service sector today in a sweet spot from many angles, right from the credit growth picking up, the margins are maintained. At the same time, valuations are reasonable, and that's the sectors I think is actually the funding the growth in the economy and proxy the economy. As the economy starts improving, definitely the banking and financial service sectors remains the core sector to keep it part of the portfolio.
Sure. Okay, those are all the pointers as to why banks should form a part of your portfolios. But in recent times, you've had from the mid-sized to smaller private banking names. There's been headlines around AU Small and IDFC First Bank. Of course, RBI has come out and said that it is not a systemic issue, and of course, it pertains to one particular account, and that also happened physically and not digitally. So, does that shake up some bit of confidence when it comes to smaller banks? What is your view on this entire issue?
No, I think this is one of an accident, I would say. I think that one accident should not be treated as something is bad in the banking system. I think I've seen the Indian banking systems evolving over a period of time, not just generating return for the shareholders or meeting the expectation of deposit holders or shareholders, even managing the risk. I think there has been extreme amount of vigilance. I think most of the banks have got large pool of people on managing the risk. So I think whatever we have seen in the last few days, there is more of fraud kind of things, which I think such kind of things, I think is more of an accident, I would say, one of kind of things. But that should not actually make us believe that either the particular bank is bad or maybe the sector is bad. So I think the way vigilance system today exists in the system, the recovery is also equally faster. While of course the fraud could happen, I think given the fact in the last few years, the systems have been getting better and better in terms of identifying the gaps and fixing it as quickly as possible. That's why I think the guidance coming from the Reserve Bank of India and the way they think banking systems operates very quickly, swiftly on all such occasions. That's one of the reasons where we don't see a prolonged awaiting for a solution for any issue that we see. I think over a period of time, I think India has learned to fix the issues as quickly as possible so that it does not create any problem for the company themselves or to the systemic system as a whole. So that is being the case. My own belief is, given the fact that our recovery system is also equally strong, that something would probably be helpful for the whole banking system in general. At the same time, it can lead to some bit of loss of business. At the end of the day, there are certain segment of the business that comes in on the basis of certain expectations. So temporarily, we'll always see some bit of loss of business on account of this kind of incidents. That's something I would probably say it'll make the system to have to do that much hard work to get back on track.
Okay, got your point. And this, of course, also sets an example for other smaller banks, the kind of steps being taken when it comes to this particular case. But we've spoken about IT at length, we've spoken about financials. Are there any sectors where you remain cautious despite the improving outlook when it comes to the Indian economy, despite the earnings expectations? Any sectors where you would remain cautious now?
Nothing specific come to my mind. I think given the fact that we are looking at holistic growth, and there is a likelihood of cyclical recovery as well. And in that context, we could probably see underperformance or outperformance coming on the basis of certain outlook that emerges. By the way, I don't see any sector going through some kind of negative, rather something one should worry about it. I think some of the sectors which are, of course, getting impacted was textiles, because the general levels of buying pattern in the apparels and other things were had suffered, I think, post-COVID. I think I would probably assume that this point of time we are in the recovery path, given the fact that lifestyles also is changing. That is being the case, and also the US tariff thing coming to somewhat closure. The sectors which are exports-driven sectors largely depend on overseas market, including textiles. I would probably say on the recovery path rather than on the negative side.
Okay, all right, got your point. Another thing that I want to talk about is, of course, precious metals. In terms of flows as well, gold ETFs, the flows grew 100% if you look at the January data. It just shows that, in the stock markets, if it's not, prudent to, or the era of easy money may be over, that cannot be said about, gold ETFs, right? Because you can see how investors are chasing returns there. Last month we saw solid inflows, ETF inflows into gold funds, into gold ETFs kind of growing 100%. Do you expect that trend to continue for the remainder of the year, perhaps next 3-4 months? How do you really look at that? Crazy inflows into gold ETFs, even silver for that matter.
Yeah, I think unfortunately people do chase return, and one is coming. Normally, it comes as part of asset allocation, which is fine. But second, I think there is a tendency to chase the return. We have seen this cycle, even in the equity market, when there is small and mid cap are performing significantly better than the large cap. I think investors were chasing the return basis, which we saw that segment of the market growing faster than even the large cap funds. And that's, I think, cycle we always go through. I think as it stands today, we must also accept the fact that while the Indians' ownership in gold is one of the highest in the world, at the same time, as an investment, I think this is more for utility value versus the investment. The investment-led demand for gold and precious metal were relatively less, especially coming from HNIs and also the middle class income people. I think what we are seeing as a rush is largely on account of reallocating the portfolios in terms of portfolio allocation. And of course, return has been quite faster. I think the return that's coming in gold and silver, I think, is got in about 1 year, 50% return kind of things. That's what make people to enter. This generally, I've seen this in the historically, this kind of behavior as sets in people in the base of short-term significant outperformance. But having said that, ultimately, as the earnings starts coming in, fundamentals starts catching up, start reflecting on the companies, then naturally the metal as an asset class should see a reduced demand. And third is the current volatility that we are seeing in dollar versus rest of the currencies. I think as we start seeing some bit of rate cut coming in and then uncertainty gets over, then we'll probably see the demand for gold and silver can get reduced. But having said that, I think these two asset classes will remain in the prominent asset class along with the equity, given the fact it gives the ability and opportunity to hold dollar assets as an alternative dollar, which otherwise no other segment gives you the opportunity.
Okay, that's the view. Got your point, Bala. Lovely chatting with you. I have so many other questions, but no more time left. But we'll save it for the next time. Thanks a lot for joining in. Always a pleasure.
Sure. Thank you. Thank you.
Well, on that note, quickly take a look at the market before we get on board our next big guest. The Nifty is up 158 points. Mid-cap index, up 0.5%, but it's the benchmarks that's taking the lead today. Sensex is up over 500 points. Breadth of the market is looking fairly steady, 2:1. That's the NSE advanced decline ratio. And of course, sectorally, it's the IT pack that's taking the lead. Some value buying emerging there, 2.5% up for the Nifty IT index. Metals, real estate, energy and FMCG are the other pockets that are driving gains today. On that note, let's shift focus to another guest who's joining us, Tanvi Kanchan, Associate Director, Anand Rathi Share and Stock Brokers, joining in. Tanvi, great to have you on the show. First of all, what is your overarching view on the Indian market? Because the dynamics are changing. We saw a very solid rally come through once we had clarity on the India-US trade deal that's been overturned. And of course, now there's a lot of uncertainty we are staring at once again. And then, of course, there is uncertainty in terms of AI as well, which has got all the IT stocks, getting hammered out of shape. In light of all these developments, how are you viewing the Indian market? And according to you, what would be the triggers on the positive side here on?
Thank you so much for having me, Nanta. I think there is a lot of volatility with regards to Indian markets, especially now. We just literally got off a 2-hour conference call of the State of Union that President Donald Trump just concluded, where he started with the positives, defended how his entire tariff structure did add on, and has made a statement that he's going to move the tariff to something called a tax structure as well. There's a lot of developing stories over there. India did go through an entire whirlwind of being the highest tariffed country at 50% in comparison to its peers, to getting a final trade negotiation at 18%, and then we are at the 15% benchmark as stated by the Supreme Court ruling in the US. So a lot surely has happened on that particular front. Now we are still in that uncertain times of exactly what's happening on the US front, because there is still a lot of developing stories that are coming in. One thing that we did witness is the constant reduction of your FII money last fiscal year. So last year we saw almost 3.3 billion outflows with regards to pure FII money. However, we are also seeing them kind of counterbalance this year. We are seeing FII at at least in the month of February, come with a very huge positive number. So you're seeing reassurance in the Indian market structurally as well, even on the foreign counterparts. The positives are, of course, we have come with a good trade deal, even with the announcement date that came in at 18%. The market broadly surged. Our repo rates are, again, with the RBI coming with a very clear, reduction throughout. We are having a good transmission to borrowers as well. Inflation numbers are good. In the last, the union budget that took place on the 1st of Feb, the government was very clear in terms of the fiscal, capex recovery growth. You have DIIs that are continuing to buy and showing a positive market front. Even in terms of GDP estimates, we are way above consensus. So we are one of the country that has a positive and a fourth consecutive growth in comparison to any other country, even in the peer space. So that are the main short-term positives that should negate these short-term risks as well. So you're seeing FIS continuing to have a sell. Last year did have a drag. The recent traction in crude as well does have an impact on inflation and does add to the margin risk. You're seeing rupee kind of have a very slide as well that shows your currency weakness. That does have a certain level of range bound even at a market level. So those kind of counterbalance your short-term risk, so to say, on a broader market level.
Sure, you made quite a few points. Just talking about the tariff deal, so to say. Do you think after, the Trump's retaliation, 15% global tariff, on paper, at least it looks like India is in a better position compared to other nations? And, in light of what is really transpiring on the tariff front, which are the sectors that you would be wary of, in light of these trade developments?
I think one is, of course, we got a brilliant consensus on the agriculture, dairy, which was basically excluded. So you had farmers that were protected. The key sectors other than your agriculture was textile, leather, gems, engineering, and even pharma to a certain extent. But when the sectors that we need to watch out for will continue to sort of be on the neutral or negative space, where we'll not have the entire advantage of the tariff coming in. So we are still looking at a certain level of pharma. We're still looking at non-dairy tariff, which is still unresolved. But the main thing that we need to kind of also see is we eliminated the restrictive import license on US on the ICT goods. We did address the NTB, medical devices, food products, the oil, again, that's a 10% increase already that we have seen. So that also, anything on the allied oil sector will also have an impact on something that you need to watch out for. We kind of do have a commitment also to a certain number of 500 odd billion US products. So that is also an extremely ambitious number that we are looking at. So I wouldn't say that there are any sectors that we are extremely negative, but yes, there will be allied sectors that have an impact because of the reduction in tariff and also on the pass-through level.
Okay, point taken. Of course, not many sectors where you have a negative stance, but of course some sectors do get impacted, and till the time we get more clarity, of course, cause to be a little cautious in those sectors. But I just want to understand your thoughts on this whole AI disruption fears, and it's been ongoing, right? Some days, you feel that these companies, AI companies and traditional tech companies, they will all coexist, collaborate, and of course we had the AI summit as well, wherein a lot of companies came out and made certain statements, and that found favor with the market. But recent the launches by Anthropic have kind of given rise to a lot of fears. How are you reading into it? What is the read-through for Indian IT? Would there be volatile times for the next couple of years? Is the worst in the price? How would you look at this development overall?
Absolutely, Nandita. And I think you would have seen the kind of way the IT sector just slipped yesterday. However, today markets open, you're already seeing an uptick in these particular sectors. Your IT index was down almost 15%, which was the worst performing ever since the financial crisis of 2008. Again, on the backs of AI-driven rally, again on the backs of various downgrades that even Jeffries did on Infosys, HCL, uh, HCL Tech, emphasis, and also kind of said that, you need to look at trimming exposure on other companies. That had a very clear impact on the Indian IT sector, again, down 15% on a YTD basis, 30% from its peak, which did signal a very clear alarming space. However, on a structural basis, Anthropic also came out saying that it's not a replacement. It is more in terms of an addition to their broader structuring. So it's not going to be that it's going to completely eliminate or completely take over the capabilities. It's more going to be a guidance in terms of improving the capabilities and functionalities. That statement did cause a certain level of rally, a certain level of relief that we are seeing today. So the major tailwinds that we are going to look at is the AI POCs, which are converting into large-scale development. So India IT sector, how is it going to be an execution partner? Our IT sector, again, is still targeting about 300 billion in the next financial year. So the main thing is how is it that we are going to add that kind of revenue from this particular sector? We still continue to have a good balance sheet. So on a balance sheet level, we are still looking at companies with zero debt. We are looking at companies with extremely good cash flows and huge scope for M&A activities as well. So while the downgrade did happen from a major space, but in terms of acceleration, in terms of growth, we are still positive on the broader growth trajectory. So we are still looking at decent premiums in certain good companies, and we're continuing to maintain a cautiously optimistic outlook on the sector.
Okay, cautiously optimistic outlook. When you talk about growth for these companies, of course, they are cash-rich companies, and they've given single-digit growth, yes. But here on, in terms of growth, how much lower can it go? We've spoken to experts who've said that growth will definitely not go into the negative territory. Would you be of the same view? Chalo, it will not be double digit, it will not be 8%, 7%, 6%. A 2 to 3% growth, would that be a reasonable expectation from IT?
Yeah, see, IT still has a decent amount of premium that it is trading at. Even with the kind of underperformance, you're still at a decent premium. So a growth range at 6-8% is kind of something that can be expected from this sector. In comparison to your broader indices of 12-14%, that's the kind of growth range that can be expected.
Okay. 8% you said, right? If I'm not mistaken, I missed that
A
number.
range of 6-8% in comparison to if you're looking at broader indices at 12-14%, 6-8% kind of a growth, because you're still looking at premium, you're still looking at AI coming in, you're still looking at how your broader deal cycle will lengthen, because that's something that will be impacted. You will have clients showing cautious, you will have approvals as well. So that, taking into account, along with the US uncertainty, Fed delaying the rate cuts as well, will surely have an impact on Indian IT sector as well.
Sure, but 6-8%, I think is fairly still more optimistic one, in comparison to what other experts have to say. So I'll take that point from you. But one last question when it comes to IT, mid cap or large cap, where do you find comfort?
I think on a cautious approach, I would still go with large cap, because again, you are looking at a level of pass through, because it's not only domestic, it is also extremely volatile on every global impact that's also happening. So we would still look at, we would still have a preference on the large cap.
Okay, large caps preferred, and as has been the case with most of the experts that we have spoken to. But let's shift focus to the FMCG space as well. I was going through your report as well, and you mentioned that, of course, there are early signs of a volume-led recovery in FMCG after a weak phase, and that we saw play out in the earnings, the quarterly earnings that went by as well. But do you believe that the worst is behind for the sector now? Because even after so many help from the government, in terms of demand, income tax cuts, etc., we haven't really seen the stocks fire up as such. Where are you in terms of which end of the cycle we are in when it comes to FMCG?
I completely agree. The broader sector is down approximately 6% in the current year, underperforming major indices as well. And there has been a sector re-rating as well. And we have seen a lot of government subsidiaries, GST cuts. Despite your weak price action, we still see that the fundamentals for the broader sector are positive. We feel that the GST cuts, rural recovery, income tax relief, you have premium level of trading as well that's happening, and a certain level of capex decision that should kind of impact on a positive way for the next fiscal year on the FMCG sector. We are looking at urban volumes also picking up. So you're looking at urban volume picking up to the range of 4.5%, a rural recovery of more than that. Your FY 26 target, even if you're looking at a very base case of 5%, that's a decent recovery. So although we're not expecting a very extremely huge return, however, we are still looking at it to come out of the tailwinds that it witnessed last year and have some level of positive impact.
Okay, tailwinds for the FMCG space. So many of these stocks have corrected, and of course valuations may be looking more reasonable, but is this the right time for investors to start accumulating stocks from this space?
I think at an investor perspective, people who are extremely positive on the Indian fundamental story for the long term, there isn't a right time to enter the market. It is when and how much are you going to start accumulating in the Indian market. So volatility, volatile space, different kind of impact does help people to kind of get in good stocks, especially stocks that have had a certain level of downgrade, stocks that have had a certain level of impact because of the entire global war. So that becomes a good space for people to enter into good, fundamentally sound companies. I would say for people who are keen in terms of getting into the whole investment space, they can get into it in a much more staggered manner for sure. It's not a wait and watch. It's how and when do you want to start deploying.
Okay, staggered manner. That's how you can start accumulating these stocks. Any picks at Anand Rathi when it comes to FMCG space?
We don't. We will probably share the research report, but yeah, we are as positive on the sector as I mentioned, looking at tailwinds in terms of recovery as well. We surely have a very clear understanding of how the pass-through has happened from the different updates. We are looking at different acquisition that has happened. That is your Marico 3 acquisition that it went ahead and did. There's also certain excise benefits from the UP government that will have a positive on certain companies as well. So we are positive of the broader sector. Yeah.
Sure. In fact, I got hold of your research report, and those are some of the stocks that are flashing on your screens. That's some of those top FMCG picks from Anand Rathi. Last question, really, on the discretionary side now. There are expectations of a stronger summer, and of course, GST-led demand boost is also expected when it comes to some of these cooling products, ACs, etc. Could there be better volume growth going forward? What's the view on stocks like Voltas, Blue Star? Because over the last month or so, these stocks have seen good traction.
Yeah, I think again, these stocks do have a huge space for growth. We are positive in terms of a growth trajectory. We are positive in terms of a cyclical turnaround as well. I would like to maintain in terms of a growth space. Yes, we are as a group positive on the growth uptake on these stocks.
Positive on the growth for some of these stocks which have had a fairly rough run, but in the last 1 month we've seen some traction play out on some of these stocks. But with that, I would like to thank you, Tanvi, for joining in and sharing your thoughts. It was lovely chatting with you, and I look forward to more interactions going forward as well.
Absolutely, Nandita. Lovely speaking to you as well. Thank you so much.
Thanks a lot. Thank you. Well, eyes on the screen then. Where are we? We are almost at the high point of the day. 25,600, that was the level on the upside that our experts have been mentioning, and we've hit that level. For now we are going strong. Let's hope the second half turns out to be as good as the first half, and it turns out to be a wonderful Wednesday after a terrible Tuesday. Let's hope for that. But good traction. Benchmarks taking the lead, almost 0.8% kind of a gain on both the Sensex and Nifty. Mid cap index up 0.5%. The breadth of the market is looking pretty solid. 5:2, that's the NSE advanced decline ratio. Bank Nifty, although it's clocking in mild gains, but still it's around that 61,200 mark. But IT is the top performing pocket. Just want to see if it's picked up further traction. Yes, the IT index is up almost 3%. Metals, a close second, 2% uptick there. Autos have now edged back into the green. In fact, autos are up almost 1% or so. Real estate is up 1%. All the sectors on the screen are flashing green. So good Wednesday turning out to be for the markets. So yes, with that thought, just want to quickly take a look at some of the gainers then. Before I toss to that Trump address, the sound bites from the Trump address. Infosys is up 3.5%. HCL Tech, TCS, Tech Mahindra, Wipro, top 5 movers. Value buying emerging in some of these IT names. Interglobe Aviation is the other one that's up 2%. Hindalco, Tata Steel, JSW Steel, all these stocks are doing well. ICICI Bank, Axis Bank, these were all the stocks that were in the green from the banking lot. Largely most of the names on Nifty are trading in the green, barring 8 to 10 odd names that are witnessing some bit of selling pressure. But those cuts are also not really very deep, because Dr. Reddy's is the top lagger, but it's down just about 1% or so. SBI from the PSU banking lot is seeing some bit of profit taking. Eternal has once again slipped into the red. The stock has been an underperformer in recent times, and today it's opened in the green, but it's once again edged back into the red. Tata Consumer and ITC from the FMCG basket are in the red, and Kotak Mahindra Bank and Bajaj Finance from the financial space are not doing all that well in an otherwise strong day for the market. But on that note, we'll call it a day here on Opening Bell. But before I go, let's hear out Donald Trump. He was addressing the Congress in his 2026 State of the Union address, and in fact he declared that America is back, bigger, better and stronger than ever. Of course, he's touted trillions in new investments and a historic drop in inflation as well. And he's also spoken about tariffs. He said that over time tariffs will replace taxes. Let's listen in to what he had to say, and of course we'll take your leave at this point. We'll be back with closing bell at 3 p.m, so don't forget to tune in for that. But listen in to Trump, and then of course you can stay tuned to Moneycontrol for all your other news and updates as well. Thanks for watching.
Our nation is back, bigger, better, richer and stronger than ever before. Less than 5 months from now, our country will celebrate an epic milestone in American history, the 250th anniversary of our glorious American independence. In 12 months, I secured commitments for more than $18 trillion pouring in from all over the globe. Think of it, much less than $1 trillion for 4 years versus much more than $18 trillion for 1 year. What a difference a president makes. A short time ago, we were a dead country. Now we are the hottest country anywhere in the world, the hottest. Never go back to where we were just a very short time ago. We're not going back. Today, our border is secure. Thank you. Today, our border is secure. Our spirit is restored. Inflation is plummeting. Incomes are rising fast. In this chamber 12 months ago, I had just inherited a nation in crisis with a stagnant economy, inflation at record levels, a wide open border, horrendous recruitment for military and police, rampant crime at home, and wars and chaos all over the world. But tonight, after just 1 year, I can say with dignity and pride that we have achieved a transformation like no one has ever seen before, and a turnaround for the ages. It is indeed a turnaround for the ages. July 4th, we will mark 2.5 centuries of liberty and triumph, progress and freedom in the most incredible and exceptional nation ever to exist on the face of the earth. And you've seen nothing yet. We're going to do better and better and better. This is the golden age of America.